Hello everyone, how's it going? In this video, we're going to talk about Aterian, trading under the ticker symbol ATER. Before the video begins, if you like my content, please like, comment, and subscribe to my channel for more analysis videos like this one. Over the past few trading days, the price of Aterian moved from a low of $3.12 to a twin peak at almost $18, before falling to the current level around $10. Overall, the price evolution in the short term has been a roller coaster because there were a lot of people who wanted to squeeze out the short sellers. That was partially succeeded, as they did so twice. The question now is whether it is enough to keep the company afloat in the long term, and if the short sellers can afford to participate in this game of attrition. Because don't forget that when you have short positions, you have to pay financing costs to the brokers over time, and long positions don't. The company operates in production and manufacturing of home appliances, beauty products, and electronics. In other words, it works in the manufacturing and retail sectors, more or less. Over the past 10 days, the trade volume has been hovering around 40 million shares a day. This means that there are significant interests in the financial market, which is good because for a speculative short squeeze like this one, it's crucial to keep the pressure on. Alright, but with that being said, I think that it's also normal for the stock to start dwindle a bit in terms of volume because, retail investors are typically limited in their means but also in their patience. And another thing is that they tend to buy at the peaks and sell at the bottom. What I mean by this is that when the stock starts to pull back, a lot of them would get spooked, and that's when a lot of them would also sell. In other words, the opposite of how things should actually be done if emotions were removed from the equation. But to be honest, there's not much we can do about this. In the immediate future, the key price levels to look for are between $5 and $8. Meaning, the price can be expected to fall between that region and meet some degree of support because more people should be buying them with the hope to scoop the bottom. Another way to see it is that if the bears keep pushing down, the region between $5 and $8 would be a very choppy region to go through. But let's take the worst case scenario for a moment and assume that it does go through. Then we may be looking at the share price of ATER going to the lower end of things, at around $3 or so. By then, it would mean that the stock would be significantly crushed by the short sellers, or largely abandoned by the retail traders, which really gets us to the same result. My recommendation is to start looking for a point of entry, but with the expectation that the price may keep falling if things remain the same without external catalysts in the upcoming weeks. Another thing to keep in mind is that Aterian isn't exactly having amazing fundamentals either. So there could be other objective reasons why the shares may go lower. But like I said before, for a stock like this, fundamentals don't ultimately matter that much. As long as the stock is supported in volume by retail traders in masses, which I believe is going to continue over the next couple of weeks. The exposure I would recommend would be around 1 to 3% of your portfolio, and that should be bought over a period of time in batches and not in current level in one shot. Looking at the current environment, I think we have to be careful about having exposure in equity market. The market has been predicted to eventually go through a major pullback or even a recession for more than a decade at this point. Well more than a decade. After the quantitative easing years and the drastic increase in asset price and the corresponding decrease in their yields. We have to remember that the market isn't a mirror to how the economy is doing. Because otherwise, we would have seen a market trading a lot more sideways than upward. And then 2020 saw another big push in asset prices, and this time not just for the blue chips, but also the growth stocks. There are generally two explanations. The first one is that more money has been printed around the world, And because the real economy has been, quite sluggish over the years, the capital has to go somewhere. So it ended up going into this huge melting pot of globalized financial market and has been buying up shares ever since. That was the case for quite a while, but now the quantitative easing has been touching its end in North America, and in Europe, they are considering of winding it up after the last trillion that they will be printing. In other words, that will not necessarily play an important part in, the continuing support to stock price in the years to come. This decrease is partially compensated by the geopolitical tensions around the world, because the more tensions there are, the more money there tends to be, because capital will choose to flow into safe havens, and US is one of those. What this means for the market is that the degree of uncertainty will increase over the next couple of months and years, especially as the expectation for a recession is building up after the party in 2020 and the recent announcements from the US Fed that there is a real possibility of a big recession coming down the pipeline. There could be just, fear-mongering. It could just be pure speculation, but we still have to be careful. Of course, there also has been a buildup of economic difficulties coming from Asia. Like, all these elements do make me feel that, like I said above, it's very important to keep any speculative plays at a very reasonable level. So, in other words, keep your position in stocks like ATER at around 1 to 3% and don't go beyond that, because you could get seriously burned if the market really starts to turn downwards, and it could last for years. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.